The big news everybody's talking about this morning is this article here in the Wall Street Journal. The Fed is set to raise rates by 75 points, but then debate the size of future rate hikes. Stocks saw this article this morning and traders just went in. They bought that dip. Up went the indexes. Everybody is piling in. They're saying this is it. The Fed pivot is coming, but not so fast. The market has this one wrong, folks. First of all, a couple of things. They're still going to hike by 75 basis points. That is still a huge rate hike and an incredibly hawkish move. Secondly, talking about hiking by possibly 50 basis points in December, that's hardly dovish. It's not as hawkish as they've been in the past, but it would still be an incredibly hawkish move. Now, the third thing, Jerome Powell has said this exact thing 2 times before in previous meetings, and 2 times before the subsequent inflation number came in hotter than expected, and Powell was forced to walk back that statement and follow through with another 75 basis point rate hike. We've now had 3 consecutive 75-point hikes. We're looking at a 4th. Lastly, there has still been no movement in inflation. I did this video just a couple of days ago about how all of the reductions in CPI have only been driven by energy, and everything else continues to get more expensive with the exception of autos, and therefore everything that the Fed has done so far has had zero effect on inflation, that the Fed has not even made a dent in inflation. Jerome Powell knows this. The other Fed governors know this. So yes, this article would indicate a move in a dovish direction by the Fed from ultra hawkish to only mega hawkish. And yes, that's a dovish move, but that's hardly a pivot. But let's think about this. Why is the Fed doing this? They're not declaring victory on inflation. In the Fed's own words, they still have a lot of work left to do on inflation. And CPI reflects that. Core inflation has continued to get worse, and now energy prices are on the rise again, so we're looking at higher CPI reads in the future. So why would the Fed be moving in a dovish direction right now if they know they're not beating inflation and that inflation is about to get worse? Well, that means the Fed is suddenly not so worried about inflation. They're more worried about something else. And while everybody is looking at, hey, the Fed is about to pivot, nobody is thinking about, well, what is that something else that has the Fed worried now? And that something else is a liquidity crisis, a banking crisis, something like happened in the UK last month, the possibility of pensions failing, the possibility of banks going under, of Credit Suisse failing. Whatever it is that the Fed sees going on in treasury markets that has them considering a smaller rate hike in December is scaring them even more than higher inflation prints. And that is no reason to go piling into stocks right now. All these people who are buying the dip, saying the pivot is here and stocks are about to go up, you don't know what you're walking into right now. The Fed sees it, we don't. So even if I'm wrong and the pivot is about to happen any day now, in the face of higher inflation, it means the only other reason that would cause that pivot is something so bad that the last thing you want to be doing is holding stocks when that happens. So while I have to CYMA and say I'm not a financial advisor, this isn't financial advice, do your own DD and your own research, I can tell you the last thing in the world I want to be doing right now is being caught long some high-flying tech stock, some Cathie Wood, ARK Invest garbage out there that's dependent on the easy money train arriving. Because whatever it is that the Fed sees happening in treasury markets right now, whatever that is going to be so bad for stocks, it won't matter what the Fed does, at least not in the short term. All these people that are out there piling into stocks off of this news are going to get burned when whatever it is the Fed sees finally hits the tape. Maybe it's Credit Suisse. Maybe it's the UK pension thing happening here in the States. Maybe it's something totally different that we haven't seen coming. But something has the Fed spooked right now. And when the Fed gets spooked, it's hardly a time to go running into stocks. Till next time, live small and dream big.